Okay, in part two here, we're going to talk about financing activities. And really, they're very straightforward, or more straightforward in my mind. They particularly focus on um, items in the long-term liability and shareholders' equity accounts on the balance sheet. So notes, bonds, long-term debt, common shares, retained earnings, anything that sort of affects those particular accounts needs to show up in financing activities. Now, we can look at the formula for debt and basically understand what's happened, what's the ins and outs of long-term debt. And what it really is the cash payment of debt. That's equal to the beginning balance in debt plus the issuance of new debt minus the ending balance. So, and you can figure out the payments that have actually been made just by filling in the blanks here. If you know all these numbers, then this number you just compute. Same thing happens with shares, or whether it's issuance or repurchase of shares. Again, you start with the sort of the beginning balance, the issuance of new shares that you know about, minus the ending balance. That'll give you how much you repurchased in shares. So yeah, you can figure those things out mathematically if you want. Dividend payments, same thing. We can recompute sort of the retained earnings. If we know the beginning balance and we know the ending balance, and of course we always add net income to retained earnings, then the dividends are whatever we need to make this balance. So in this case, the number was 41,000. So, yep, there it is right there. All right, that's part two wrapped up.